Welcome to Taking Stock, our weekly wrap of the market action this week. The Sensex climbed on Monday, November 23rd for a second day, led by commodity stocks after metal and oil prices rose. Telecom shares, on the other hand, took a tumble on concerns that the low fee for number portability would make it harder for telecom companies to retain customers. The government set the fee at 19 rupees. Reliance Industries gained almost 3.5% after it said it was buying bankrupt chemicals and fuel producer LyondellBasell. The benchmark index fell for the first time in 3 days, this time after lower metal prices led commodity shares downward and as most other Asian markets declined. Auto stocks increased on expectations that auto companies would report higher sales this month. Car sales have risen for 9 consecutive months on easier borrowing and lower interest rates. Tata Motors and Mahindra & Mahindra reached 52-week highs on Tuesday. The gauge advanced slightly on Wednesday. ACC led gains among cement producers on expectations that higher prices of cement would help bridge the gap between the industry and the broader market. ACC has climbed 0.6% over the last 3 months, while the Sensex has risen 9.6%. Satyam Computers plunged 11% after the CBI found that the company's accounting fraud was 40% greater than previous estimates. The sensitive index plummeted on Thursday on a combination of news, including a rising U.S. dollar, disappointing Tata Steel results, and Dubai's debt problems, which raised fresh concerns about the global financial system. Stocks across sectors took a hit. Stocks took a dive on Friday, again reacting to news of Dubai's debt problems. Top gainers were Bharti Airtel, Hero Honda, Reliance Infrastructure, Grasim, and Tata Steel. Top losers included Jaiprakash Associates, Larsen & Toubro, Infosys, TCS, and Sterlite Industries. Barring the healthcare index, which increased marginally, all other sector indices ended the day in the red. To tell us more on what to expect from the markets, we have with us Thunuguntla of SMC Capital. So markets around the world, including India, have been impacted by the news that one of Dubai's state-owned holding firms may default on its debt. So what does this mean for Indian markets and how significant is it?
After the last year's 2008 debacle, after the governments across the world have put in the liquidity, markets have staged a 100% recovery from their bottoms of 2008. However, it was always has been backed on the liquidity, not necessarily on the basis of the fundamentals. So this was always on cards, that double dip recession, that is some or other event developing, and then again markets getting into that kind of lack of confidence and lack of conviction kind of mode. Now this event of Dubai may be the next trigger for that disturbing the confidence levels and the conviction levels of the market.
And telecom stocks were also in market news early last week, and some analysts are advising investors to stay away from the sector for now because of cell phone pricing issues putting pressure on their revenues. What are your thoughts on this sector, and would you say it's a good buy or not?
If somebody is ready to take some contrarian view about at least the frontline telecom stocks of India like Airtel, Bharti, and this can be a very good time because the share prices came to that levels, just 10 to 12 PE multiples, because the quality companies like Bharti with such strong balance sheets, it will be very, very rare occasions where you can get them at 10, 12 PE multiple. So if somebody is ready to take that contrarian call, I think it can be a best time to buy at least frontline stocks, because Reliance Communications I'm not sure, but definitely Bharti worth looking at these pricing levels. And moreover, as these stocks have already fallen so much, even if entire market goes for a downward pressure, even then these stocks may not fall that much.
And any other sectors or stocks to watch out for?
It will be better off concentrating being defensive by maintaining as much cash as possible. If at all somebody wants to take a position, take the position in the defensives like pharma and FMCG.
Okay, thanks for joining us. And that's all we have for you today. Thanks for watching.